Is your lender lying? Of course, I don't know the answer to that, and I hope your mortgage lender isn't lying to you. But what I can tell you is the mortgage industry is filled with red flags when it comes to quoting rates. As a mortgage broker with over 5 years of experience, I've competed against countless other lenders and at times their gimmicks over and over again. And it's about time we overviewed some of the top bait and switch schemes that are pervasive in the mortgage industry, that's both nationwide and in local markets. So, why would a mortgage lender resort to a bait and switch tactic to win more business? Well, the number one reason is obvious. Mortgage lenders are commission based. So, motivation is high to win more deals. And when that happens, ethical lines get a little bit blurry. The other reason, you've heard me say it before, but mortgage lenders, like any other business, have overhead in their business. And that requires a margin on the interest rate to help cover those expenses. Some lenders have quite a bit of overhead, and others have a more lean and mean business model. There isn't a correct answer to how large or how small a mortgage lender's business should be, but it will impact how much margin is in the rate and therefore make that interest rate higher. So lenders want to make their offer stand out and make it look like they are offering something better than other lenders. But is it a better offer, or does it just seem like one? Also, isn't lending heavily regulated? Aren't there rules that lenders must follow when quoting a rate? Yes, there are many important rules that lenders should follow. But unfortunately, many nefariously or accidentally work around these rules to make their offer seem more appealing than it really is. So, all that to say, what are the most misleading tactics a mortgage lender can use when quoting a rate? Well, the number one reason or the number one red flag is a lender claiming there are no fees for a transaction. You might be holding a mailer that says this exact thing as you're watching this video. While it could perhaps be true that a lender is truly offering no fees on a refinance or purchase, this often is only referring to fees like underwriting and processing, which in reality would only save you $1,000 to $2,000 on the transaction. Furthermore, the lender might play up that other lenders charge fees, but we don't because we're the good guys. But this might be hiding the fact that their interest rate is a bit higher than it needs to be. If you move forward with this lender, you might find that one, not only are there plenty of fees still associated with this transaction, but two, the interest rate isn't as competitive as another lender's. Before we move on to the next point, let me give a quick introduction. My name is Jeremy Stebbins, and I'm the senior mortgage broker at the Mortgage 101 team. And for the last 5 years, I have helped prospective homeowners learn about and achieve the dream of home ownership. And my brokerage, Expert Home Lending, allows me to help with originating mortgage loans in over 45 states. So, as a mortgage broker, I have access to over 120 lenders and thousands of programs to help you achieve home ownership almost anywhere in the country. All right, back to the lending red flags. Number two. Number two is implying that a lender credit is free money. A lender credit is fundamentally almost never free money because, back to my introduction regarding a lender's margins, lender credits impact the margin, and in many cases, a lender credit would fundamentally raise the interest rate in order to offer the lender credit. To make things worse, some lenders promise a lender credit up front as if it is something special that only they offer, and then don't actually give the credit when it comes time to disclose the loan and the costs and credits associated with that transaction. So this is a bait and switch to get you in the door, and they hope you don't realize you can shop until it's too late. Okay, red flag number three, only quoting APR with no actual interest rate. Unfortunately, this practice is illegal when it shouldn't. Some lenders dangle out APRs that look nice and low, but by also showing the interest rate, without showing that interest rate, you could literally be paying $10, $20, $50,000 in fees to get that rate. The lender hopes that by the time you see those fees, it's too late for you to go shopping. But it is important to remember that you always can. Red flag number 4, quoting on the best terms possible instead of quoting based on your financial profile. Some lenders might send out quotes based on 800 credit score with 25% down, but if your credit is 720 and you don't have that much money to put down, your loan terms are not going to be that favorable, most likely. And that's what the importance of having a discussion with a seasoned loan officer to make sure you're not misquoted because certain information isn't incorrect in your loan profile. We need to confirm credit amount, down payment, first time homebuyer status, number of borrowers, occupancy, property type, and more, and make sure all of that is correct before we send out a quote for a rate. And last but not least, red flag number 5, only quoting rate, but not either disclosing fees associated with that rate or disclosing the APR. Similar to the opposite point that I made above, just quoting a rate without disclosing the actual fees that go with that rate is the number one bait and switch in lending. Thousands, if not tens of thousands of consumers fall prey to this every year in the mortgage industry. It is really important for consumers to learn the skill of looking at a loan estimate, but more specifically learn the skill of looking at interest rate APR and how to interpret box A or origination charges associated with the loan in the loan estimate. The lender might quote heavy fees and a great rate. They might quote light fees and a higher rate. But it is important for consumers to make sure they are getting an apples to apples quote or comparison when comparing loan estimates. Want a mortgage broker's advice when considering a lending offer? Watch out for the hard close by a loan officer or some kind of guilt trip to use them. If a mortgage lender has a sound business model, they won't need to rely on guilt trips and gimmicks to pull business in. You are never committed to a lender if their terms change halfway through the process, and you do not owe them anything if they cannot honor the terms they originally quoted. If you are going to shop lenders, it is best to do this upfront, if at all possible. It is best to find someone you trust who will be available throughout the process and, of course, offer you a great deal. Someone who answers all your questions patiently and doesn't rush you into thinking that they have something uniquely special to offer you before you even understand the process. Thanks for listening to this video by the Mortgage 101 team, and we hope we have contributed to your home ownership journey through this video. If you have any questions or if you yourself are considering a home purchase or mortgage refinance, please reach out to me anytime. Thanks.